Hey everybody, it's Hari Swaminathan, Jan 26th, Monday, 11:15 a.m. Wanted to look at Apple. Apple is releasing its earnings report tomorrow. By all likelihood, it should be good. So this is a potential earnings trade which can produce a pretty nice return. But that this trade premise is that Apple will report well and perhaps go up $3, $4, $5, $6. So somewhere, if Apple is at 114 right now, after tomorrow it might go to 120, 121, perhaps even slightly less than that, 119. So somewhere in this range right here. So what I have here is the Jan 5. So if you look at the options, we have 4 days left to expiry. Volatility has gone up to 60%, which would be expected. And we have a bull call spread. So this is a simple bull call, 41 cents debit and 59 cents reward. So if you simply look at that, then this is what it looks like. However, assuming that Apple will sort of move in here, but not perhaps go much more than, say, 121, then what we can do is we can sell the 120 121. So if I turn this on, now you can see we have a break even of close to 121, and you get this nice little condor looking structure. It's actually not a nine condor. The on the put side, I'm sorry, on the lower side it's a debit spread. On the higher side it's a credit spread. So we are getting 21 cents back. So you pay 41, you get 21 back. Your net is only 200. So you can see on 10 contracts, this is 200. If you want to make it 20 or 40 or 50, that's perfectly up to you. But basically what it is if Apple reports well and goes up, and if you want to see the plus or minus, is it's about $6 and $6.50. So perhaps you want to come to $6.50. $6 would be around 120. What you could do is go to the 121 and 122 also on the credit spread. You're getting about 16. So that pushes out the break even a little bit more. And basically, you have a $250 maximum loss on this. In case Apple reports badly and goes down, your maximum loss is $250 on 10 contracts. However, if Apple reports even halfway decent, it's going to go up by $300, $400, and you can see you have a $750 maximum profit. So we're looking at a 300% return on this trade. I think it's a decent trade. Apple should do well. I haven't really looked at the background of the analyst expectations and or any of that, but strictly just looking at it from a trade standpoint, seems like this would be a good trade. You risk about 250 to gain about 750, 300% return. You can increase the contracts. You can even perhaps even go to the next weeks if you want. But however, I think since we are anyway, it's a theta flat theta position. So there's no real advantage of going into the next series. So this would be just a pure earnings trades. And, earnings trades will be speculative to some extent. However, what we can do is make, what do you call, a well-educated guess, I guess. And that's what the Earnings Max product covers. Trades like these and opportunities like these, and more detail is obviously covered in those. We look at what the volatility impact would be, what the time decay impact would be. There's a lot more analysis available in the Earnings Max product, but this is just a free trade idea that I wanted to give it out to Option Tiger members, and you can take a look. And I think it's a decent trade. Risk is about 260, reward is about 750, so about 300%. Thanks.